Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you, but I have to be honest with you, it's more of a pleasure to have this week over with. Oh my goodness, what a week it has been, to say the very least. You know, it started, of course, on Saturday when the attack began, and it just continued all the way through. But you know what? I'm going to theme today's show. I've got an actual topic, but I'm going to theme today's show the little engine that didn't give up. And I'm talking about the stock market. With all of these wild swings that we experienced through the week, over 1,000-point losses a couple times during the week, a day or so where we had modest gains or very small losses, we actually didn't end up all that bad for the week. But what I want to focus on primarily today is this. I've themed today's show, are your retirement accounts safe right now? But before I answer that question later in the program, what I really need to do is to bring everybody up to date on what has happened so far this week and absolutely bring you up to date on what happened today. Because in my opinion, today was, I'm going to go out on a limb and I'm going to say this. Today was somewhat of a historical day. As I share with you, or I'll share with you in a moment, we had about every possible thing thrown at us that could have been thrown at us. We had bad economic data. We had a market that plunged down 900 points at the open. We had oil prices at levels we haven't seen in ages. We had a terrible, terrible non-farm payroll number. Biggest increase or biggest decrease, I should say, in non-farm payroll jobs that we've experienced going all the way back to the COVID era, back to 2020. We had bad retail sales numbers. Like I said, we had everything thrown at us today. And when it was all said and done, we only lost not even 1% on the Dow today, 0.95%, down 453 points. NASDAQ down 361, 1.59% decline, and the S&P losing 1.33%, or about 91 points. This could have been a day. It had all of the makings this morning. When all these reports came out, oil prices surged overnight. Oil prices surged when the stock market started trading. We had all of these ingredients that could have easily been, well, probably surpassing the support level that we saw this week, which was down about 1,100 on the Dow, right? We hit that 2 times this week, and it had the makings to blow through that, but it didn't. As soon as it touched that negative 900-point mark, things began to rise. There were a lot of buyers out today, and I think that's something that's very impressive that we need to keep in mind. Remember, my theme with you this week to help you survive this volatility has been really simple. Diversification, dollar cost averaging with new cash. Don't panic. And that turned out to be really probably the best advice, hopefully, that you've received all week. Because it really wasn't all that bad. Let me give you the weekly numbers. S&P for the week was down 1.33%. NASDAQ down 1.59% for the week. And the Dow down just a little over 1% also. Big deal, right? That's just kind of normal time period. I mean, think about what's gone on, folks, since last Saturday. Sit back. If you're at your desk or you're somewhere where you're not driving, close your eyes for me and go back to last Saturday, when we all got the news alerts. What was that, about 7 a.m. on Saturday morning, our time, that we've launched an attack on Iran. And then think about the open on Monday and all of the different ups and downs and everything that I've covered throughout the week with you. And to think that we only lost, little over 1%, pretty remarkable. And this is what I said on Monday's show when I said, don't panic when these global war type situations happen, because our market tends to be very, very resilient. Not saying it's going to continue to be that way. We still have a tremendous amount of unknowns. But if you just put this week into the record book, you can really assume and conclude that there wasn't really anything going on based upon the performance of the stock market. It really wasn't all that bad. And you sit there and you go, wait a minute here. Oil at record levels. Jobs are slowing down. We got some problems that started to surface today in the credit market that I've been warning you about. All these negatives. And again, we lose just a little bit. I mean, not even 1% today and a little over 1% for the week. Pretty amazing. The little engine that could. So, as I build up to what happened today, because again, a lot of unique things happened today, or a lot of things that built upon some of the fear of this week. As I go through that with you today, I will then work my way up to, again, is your retirement money safe? Because frankly, as most of you are well aware, most of people's money is in their 401k or their IRA accounts, right? That's where the bulk of money that most people have. Your two largest assets are generally your 401k and your home. Well, your home's not being affected by all this volatility, but I promise you your 401k is. So that's why I want to focus on your retirement money, right? That's the biggest chunk in this crazy time period we find ourselves in. Okay, so let's go back to this morning and let's kind of build our way up and give you the play-by-play, blow-by-blow of what happened today. So, like I said, worst level, to be real specific with you, we were down 950 points on the Dow Jones Industrial Average. That happened not long after the open. And you could really see it building up. I'm looking at my notes right here. Right before the stock market opened, when I did my last report pre-market at 623, we were down 653 points on the Dow futures. Again, that was roughly 5 minutes before the stock market opened. When you gap down like that, where you start the day with such a significant loss, the algorithms kick into that momentum. And that's why we drop very, very quickly to the worst level of the day, again, down 950 on the Dow. So that's how things started. Oil prices, this was the other issue. I made a note because I wanted to cover this on the show. At the start of the day, when the stock market opened, now remember, oil trades all different hours versus the stock market, but just to give you a little perspective, at 6:30 this morning when the stock market opened, oil was at $87.79 a barrel, up $6.78, about 8.41%. So that's what investors, not the traders, but that's what investors kind of walked into. If you turned on your computer, say, okay, what's the market doing? You check oil, that's where it was. $6.78 gain. Where'd we finish? $9.89 gain. $8.86 a barrel. Remember a couple of days ago, I said the traders are calling for $100 oil. Folks, we could hit that on Monday if things continue over the weekend like they did this week. That is bad for the economy, plain and simple. I can't sugarcoat it any way possible. But the market didn't really pay much of attention to it. It's like, oh, okay. Go scratch your head on that one. Okay. So $9.89 on oil. Now, I went back and I wanted to gather some stats as to what's happened for the week on the oil side of things. For the week, listen to these numbers. Oil prices climbed $23.80 per barrel. That equates, by the way, to a 35.5% increase just this week alone. And here's a little history stat for you. That is the biggest 1 week gain, 35.5%, the biggest 1 week gain since they started trading oil futures back in 1983, year after I got out of Wooster High School. Wow, what a week, right? Think about that for a second, up 35.5%. Think if you are, well, we just got a bunch of warnings from airlines after the close today that these higher fuel prices, of course, are going to impact them. But think if whether you're a mom and pop trucking company or a major national trucking company, think about how this is going to cut into your profits. Think if you were an airline. Think if you were in any industry that directly relies upon fuel in some form or fashion. There's a lot of CFOs and a lot of number crunching going on today, and I'm sure over the weekend. Revamping financials, revamping projections, revamping pro forma financial statements to go, wait a minute, when we set out our budgets earlier in the year, no one was predicting almost $100 oil. So we've got to get that. Don't be surprised if starting next week, like I said, it began today after the close with the airline companies of giving a bunch of warnings. Don't be surprised if next week you start hearing it from other industries like the trucking industry. Hey, we're going to lower our projections. I mean, look at the fuel prices we're paying. Now, as we mentioned so many times this week on the show, the big deal about oil prices is that it affects everything. It affects all of our lives, right? Personally and professionally. But also oil, as I said earlier in the week, I think it was Tuesday, we did a topic on oil affecting real estate and therefore inflation and mortgage rates, et cetera. If you missed that, please pick up the podcast or the YouTube on that. But this is the other issue. We now have significant inflation concerns. I'm not even seeing any projections right now as to when the first Fed interest rate cut is going to happen. Now, again, this week you had the president finally say, yep, Kevin Warsh is my guy. He has to still go through a Senate confirmation hearing to become the next chairman of the Federal Reserve. But could he come out when he's, Powell's supposed to be gone. I think it's May 18th. I would hope that the Senate would have Warsh confirmed by that point. I mean, could it be his first day on the job that he cuts rates just to give this market a boost? It all depends upon where we are. Will this war, be continuing going on? Will inflation still be a concern? It's anybody's guess. But that's the biggest culprit right now is because of these rising oil prices, the impact. Remember, as I said earlier in the week, 4 to 6% of CPI calculation are energy prices, the oil prices. And next week, we do get inflationary data, the CPI, et cetera. But of course, that's not going to impact or reflect what's gone on this week. So oil is the key to the whole kingdom, as the saying goes. All right, we're going to continue building up what happened today. But first, let's turn it over to Kristen Snow. She's going to build up and tell us what's going on in the Right Now Traffic Center. Hello, my dear. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Friday to all of you. Hope you have a great weekend and get this week behind us from a market perspective, by all means. All right, I'm building up what happened today. Again, it was somewhat of a historic day. I've themed today's market the little engine that could, because once again, folks, as you're going to learn as I continue to progress through the show today, we had everything thrown at us, and all we lost was 0.95% on the Dow, 1.33% on the S&P, and the NASDAQ down 1.59. Huge success, in my opinion. And same thing on the weekly basis, just a little over 1% loss in the major averages. But we're talking about oil, right? What a shock. That's what this whole thing's about. I'm going to see if I can squeeze this in because when I was preparing for the show, I was checking just some of the latest headlines, and I came across a phenomenal article in Bloomberg, or on Bloomberg. And I wanted to share just some of the highlights with you because this is what I said at the first segment, that it's not going to take much for us to hit $100 oil. And these analysts that I want to share with you are saying the exact same thing. And once again, $9.89 gain on oil today. We closed at $90.86, over a 33% increase in price of oil this week. So let me just share with you some of the highlights of this Bloomberg article. It's really fascinating. A week into one of the biggest disruptions to the global energy market, oil prices still remain far below levels seen in previous crises. But a growing chorus of energy executives and energy traders is warning that every day that the war rages on brings the world closer to a tipping point, with several predicting $100 crude within days. Ship traffic through the Strait of Hormuz has all but halted, making reality what had long been considered a worst-case scenario for the energy markets. The number of empty super oil tankers in the Gulf is running out, hastening the moment when more production will have to be curtailed. Going to tell you what Qatar said today about that also. Back to the article. While oil and gas prices have surged this week, they remain far below the highest seen just after Russia invaded Ukraine. There were signs on Friday, meaning today, that some of the initial oil market calm was as crude prices soared past the $90 barrel mark, taking their gains to more than a quarter this week. Still, executives at 4 large trading houses, who, by the way, asked not to be identified, said the market was still too complacent about the likely impact of prolonged closures of the Strait of Hormuz and predicted oil could hit $100 in days unless there was some de-escalation of hostilities. Well, the president said something today that I'll share with you later in the program where that ain't going to happen. Now, there's already signs of stress in the physical energy markets where cuts at refineries in the Middle East and Asia have caused the price of products like diesel and jet fuel to soar. I want to mention real quickly, again, so many headlines are popping into my head. China told their refineries today, no more exporting oil. Done. Because remember, China gets a tremendous amount of their oil from Iran and coming through the Strait of Hormuz. Again, President did have some comments about the reinsurance on the Strait of Hormuz. Again, I'll share that with you later. The bottom line, when China says no exports, guess what? There's a problem right there. Okay, so there are already signs of stress in the physical markets where cuts, Middle East and Asia have caused the price of products like diesel and jet fuel to soar. Bob McNally, president and consultant at Ripiden Energy Group and a former White House official, said the market is still adjusting to how long Hormuz may be shut. Quote, we see Brent reaching $100 a barrel and above in the coming days to weeks, once the market accepts that the Hormuz closure is a week-long event rather than a brief disruption. Now, remember, folks, as I said a few times this week, over 20% of the world's oil travels through the Strait of Hormuz. There's nothing going through there right now. Rising prices. This was another major headline today. Rising prices create a headache for the president, who's championing his ability to keep fuel prices under control. Gasoline has never been more expensive than at any time he's been president. The White House has made several attempts to calm markets this week, so far without success. For oil and gas traders, the key question is when the flow of energy from the Gulf region might resume. For every day that oil doesn't move through the Strait of Hormuz, a storage tank gets fuller, bringing producers closer to the point where they have to cut production. Iraq began reducing output this week. Qatar stopped producing LNG, natural gas, of course. To be sure, the fate of the market depends upon the trajectory of the conflict, and any resolution to the fighting or signs of unblocking of Hormuz would send oil prices tumbling again. But for now, there's little immediate hope that the Strait of Hormuz's bottleneck can be fixed while the war continues to rage. On Tuesday, Trump said that the U.S. will provide insurance guarantees and naval escorts to ensure safe passage for oil tankers and other vessels. Now, I'm just going to stop there because today the president came out and said, yes, we are going to continue with that. Again, no surprise, of course, they are. Well, essentially, what they're doing is they've created a fund for about $20 billion. That's with a B like boy, $20 billion that they're going to use to reinsure. Now, if you're not familiar with that term reinsure, what reinsurance is, you get, I'll just pick a hypothetical number. You get 2 or 3 insurance companies, and I'm just going to pick one tanker. You get 2 or 3 insurance companies to insure this super oil tanker, right? For, I don't know, pick a number, $100 million. It's not so much the price of the ship, but it's the price of the cargo, right? Well, one insurance company is not going to do that. No one wants to take on that risk. So they get 2 or 3, if not more, insurance companies to do that. Reinsurance is where you then get an organization like the U.S. government now that says, okay, if this oil tanker gets hit and blows up or there's losses, guess what? We will step in with this $20 billion fund, which, sounds like a lot of money, but, you start thinking about the dollar value of a super tanker as far as, again, just the value of the oil itself. It's not really all that much. And so the president didn't say they're going to start doing that. But now listen to this side of the article. So again, president on Tuesday said they would provide insurance guarantees and naval escorts to ensure safe passages for the oil tankers and other vessels through Hormuz. The announcement coincided with the final day of reporting period for positioning data compiled by Future. Okay, never mind. Let's see. There's one part here. Here we are. 3 days on, 3 ship owners that Bloomberg interviewed and people close to some of the allied countries in the region said they'd get to receive any details from Washington on this reinsurance plan. Several owners also said the insurance, which the industry says is available, remains secondary to the safety of their crews. And it's not even clear that naval escorts will bring a wholesale return to transits. Quote, there are concerns across the industry that going through in a convoy will just put a target on the ship's backs. A shipbroker. He began his career at the tail end of the 80s tankers war. He says, I can't see a short-term solution. From where I sit, that means higher oil prices, higher inflation, and higher economic pain. Meanwhile, today, Goldman Sachs analysts came out and said there are, quote, large upside risks to the bank's oil price forecast, citing tighter than expected constraints on Hormuz shipping, limited Saudi Arabia capacity to ship crude exports to the Red Sea ports, and the risk of a prolonged conflict. Quote, we now think that oil prices could likely exceed $100 next week if no signs of a solution emerge by then, according to their analysts. But oil prices may need to go to demand destruction levels even more quickly than history and simple models focusing on the Persian Gulf exports only suggest. The unprecedented supply shock is 17 times larger than the worst supply cut incurred by Russia in the weeks after its invasion of Ukraine, the analyst noted. Let me read you that again. This unprecedented supply shock is 17 times larger than the worst supply cut incurred by Russia in the weeks after the invasion. Diesel's rallied more than 50% in a week. Jet fuel has exceeded $200 a barrel in some parts of the world. Yet European natural gas is up almost 2/3. China has told its top refiners, this is what I was saying earlier, China's told its top refiners to stop exporting gasoline and diesel, a move mirrored by some other Asian countries. Key producers are starting to sound the alarm. Qatar's energy minister warned this morning that crude could hit $150 a barrel if conflict isn't solved soon, according to the Financial Times. And finally, he said, we believe oil prices, or this is a BNP Paribas analyst, we believe oil prices will continue their ascent for the next few weeks if nothing changes in the conflict. Onshore stocks are filling up and could drive production shut-ins through March, amplifying the upside. Physical oil markets are soaring too, as indications of demand or as indications of demand and supply exceed. So you get the picture. It's a mess. No one knows where it's going other than up. And that's why, again, this was the little engine that could today. Oil prices soaring, up over 33% for the week, and we only lost a little over 1% in the stock market. That was a positive sign. I'll continue my discussion on what happened today. And again, going to wrap things up with, is your retirement money safe right now? What do you need to be doing when we come back? Let's turn it over to Jack Sabian. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. So glad this week is over. All right. It was a crazy session today. I'm building up everything that happened, all the headlines, so you can sit back this weekend with your favorite beverage, whether it be a cup of coffee or maybe something a little bit stronger, and try to figure out what you need to be doing with your money at this point. I will get to, I promise you, is your retirement money safe right now? Some ideas that you may want to be thinking about for your 401k as we go into the weekend. All right, so the takeaway from that Bloomberg article, I wanted to read that. I hate reading articles, but I wanted to do that just so you know it's not just my opinion that thinks we can easily hit $100 barrel oil and some of the other things that I've been talking about throughout the week. So now you heard it from oil traders and so on and so forth. All right, so once again, we finished down 453 today on the Dow. That was a 0.95% loss. NASDAQ down 361, 1.59%. S&P gave up 91 points or 1.33%. Oil for the day rising $9.89 to 90.86 a barrel. Many traders, by the way, are saying, look at, if nothing changes for the positive in the war this over the weekend, when oil starts trading, late Sunday night, early Monday morning, you're going to see $100 barrel. So just prepare for that. Once again, our worst level of the day, we were down 950 on the Dow. This market just would not go down. Came back, went down, came back. It was just a really volatile session, as you would imagine. Let's continue working our way through. So once again, we're up over 35.5% for the week for oil. That was the biggest since the futures began trading back in 1983. A couple more headlines there. What does higher oil prices mean? Once again, as I discussed on Tuesday's show with Dwight and with Aaron, higher oil prices mean higher inflation because 4 to 6% of the CPI calculation is oil prices, and therefore, if these prices remain, we could see an inflation spike and therefore really boot out the probability of the Fed coming to the rescue as far as an interest rate cut in June, which is where we were at this time last week, right? Everybody was pegging June as the first interest rate cut. Now, we have interest rate uncertainty. We have investors that are going, you know what? I'm feeling the pain. As I threw in that last segment, Financial Times reported today that Qatar's energy minister, not even going to try to pronounce his name, he warned that that all, matter of fact, not just his country, but all Gulf oil producers could be forced to halt production in the coming days if the conflict continues. All right, now let's go to the president. What did he have to say about things today? Well, this was another negative that the market just brushed off like water on the back of a duck. The president said in his Truth Social post that a deal to end the war in Iran cannot be achieved without an unconditional surrender. About fell out of my chair when that headline came across in early morning session. But then he somewhat softened his tone. Later, he did an interview with Axios. He said, quote, unconditional surrender could mean the complete destruction of the regime's military instead of a formal surrender. He did say yesterday, I don't know if you saw the headlines, that he wants the final say as to who is going to take over, who's going to be the new government in Iran. He said, I'm going to be a part of this decision process. All right, now let's go to the next economic headline of the day, the non-farm payroll numbers. This was a bad number, no way to sugarcoat it. For the month of February, the economy lost 92,000 jobs. Wall Street's expectation was a gain of 50,000. Private sector job growth lost 86,000 jobs. Unemployment rate still historically low, but did tick up from a 4.3% number to a 4.4% number. Then we had retail sales for the month of January. They were down 0.2%. I didn't put much credence into that one because you're coming out of December. No one's really shopping that much in January. But that non-farm payroll number, and some economists tried to twist this around, and some members of the White House tried to twist this around saying, well, there was, a lot of storms, a lot of snowstorms. There was this reason, that reason. Come on, folks. Let's be honest. We're losing jobs because of AI. There's no way around it. Between that and immigration, just the number of people, we're just not seeing the numbers at this point. We're not seeing the jobs growth. Okay. So now you're up to date on that negative that did not impact the market. You're now up to date on the president's comment that did not affect the market today. And as I said earlier, he did announce the U.S. Development Finance Corp will create that $20 billion reinsurance program to get those tankers through the strait. Now, let me give you a positive. I've had to be the bearer of bad news a lot this week, and I don't like doing that. I like to give you good news and good optimistic ideas and things. One thing I want all of you to be cognizant about. I've been doing this a long time. And as I look back into different market sell-offs and different conditions and different catalysts to these market sell-offs, there's one thing that is a very common theme that unfortunately, or fortunately, depending upon if you're long or short the market, you can say has not happened yet. And I honestly, in my heart of hearts, thought today was it. And what I'm referring to is a flush. A market flush. Now, if you've never heard of that or never heard me talk about it over the years, and we have different, again, periods of market turmoil, what a market flush is the following. It's where, and I don't know, I don't care if you want to blame it on algorithms or the human traders or whatever it is. It's where things get so bad, they can sense that you, the public, you, the retail investor, have had enough. I always use the analogy, they visualize you waving the white surrender flag. Right? It's the day in and day out of the market going down, 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 down. And we've had that, right? Just hasn't been big down days other than a couple this week. So what they do, and again, this is just my opinion, they will flush the market, meaning the algorithms will drive this market down where all of a sudden you lose 1,000 points or 1,500 or a couple thousand points on the Dow. Same with the NASDAQ and the S&P. They drop dramatically where it's kind of this, my God moment where you sit there, if you're in front of a computer and you're watching your portfolio, you go, I can't take this. I'm out. We have not had that happen yet. Doesn't happen all the time, but in the vast majority of cases, again, of market weakness in my career, it happens a lot. I'm going to venture to guess, I don't know, 70 to 80% of the time. And we haven't had that yet. Could we have that next week? Potentially. But we haven't had it yet. And that's why, once again, we're really not sitting in all that bad condition. Now, I went back and I wanted to see how far down are we, and I only had time to do the Dow side of things, which I know is only 30 stocks, but we hit 50,512 on the Dow on February the 10th of this year. That was an all-time high, 50,512. Once again, today we closed at 47,501. So we've lost 3,011 points on the Dow in, let's see, what's the date today? Today's the 6th, so we'll call it basically a month. Percentage-wise, that's about a 5.9% pullback, okay, from that 52-week high. Man, that was great. Remember that? We came on the show and like, my goodness, we closed above 50,000. That was amazing. And here we are at 47.5. So let's put it in context. Down 5.96%. What's the next stop? A 10% correction, right? That's again defined as a correction. A 20% stop on the downside is a bear market. Knock on wood, right now we're a long ways away from that. Don't even know if we're going to hit the correction. But generally when you get over 5%, so if we have a couple weekdays next week where, I'm talking 1-2% losses, then we could easily hit that 10% mark. And many times that's kind of the line in the sand. That's where things stop and slow down. And then many times that's the beginning of a bottom. So I want to just prepare you. Don't be surprised, again, if we have more downside next week, and especially if those oil traders are correct and we hit that $100 oil, whether it's over the, come Monday or Sunday night, come Monday or sometime next week. Don't be surprised. But again, something was strange today. We had all of that lined up, as I've said many times on today's show. We had all that lined up today for a major market flush, and we didn't get it. Instead, they used it as a buying opportunity. We got to watch that very closely. Again, that was a very strong positive. All right, we come back. We're going to wrap it up with, what do you need to be doing with your retirement money right now? Let's turn it over to Kristen Snow, right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on Newstalk 780 KOH. All right, now it's time for you. Many of you, of course, are sitting back going, man, what a week it has been. Hopefully you've listened to the show every day or the podcast and you're up to date on everything that's happened. But you're sitting there going, wait a minute. Is my retirement money safe? My 401k, IRAs, that type of thing? Well, let me give you just a couple little reminders and some things that I want you to think about over the weekend. So what is the human nature of an investor, of you, during market sell-offs like we're experiencing? You panic, number one. You listen to the news and it's nothing but negative. And then what ends up happening, you make an emotional decision with your money. Now, here's a little saying. Most long-term investors lose money because of their behavior, not because of the markets, right? There is no one forcing you to sell. That's your personal decision. So just remember, most long-term investors lose money because of their behavior, not because of the markets. Another little tidbit to keep in mind over the weekend. I just told you before we went to break, I only had time to do the Dow, again, down a little over 5%, almost 6% from its high back in February. But did you realize, and most people don't, that's why I like to bring this up, on average, markets correct about once a year. And when I say correct, that means a 10% decline. Think about what we've already faced so far this year. And we're only March the 6th. And we're down, like I said, 6% on the Dow side, similar on the other averages. So that's what I'm saying. Don't be shocked if we hit a 10% pullback. It's normal, right? And especially normal if dealing with a global conflict like this. Volatility is normal, and especially in this world of algorithms and all the crazy trading that goes on. Volatility for all of us is uncomfortable. But again, it's very normal. You just have to understand. That's why being educated and listening and researching, and hopefully I can give you everything you need so you don't need to go do research, etc. But just understanding and knowing what's going on, that's 99% of the battle when you get through these market volatile time periods. It's the fear of the unknown. And I try to do my best every day for you behind this microphone to sit here and say, look, this is my perspective from doing this for 36 years, from sitting here 14 hours a day, managing money, tracking the markets, et cetera, that I share with you at 3 o'clock each and every day. I'm not giving you any textbook BS or anything else. I'm telling you from a real life guy who's been doing it a long time. So the more you know, the more informed investment decisions you're going to make, and you're not going to make any knee-jerk reactions. Now, I'm going to give you 3 important things that those of you that are looking at your 401k, I can't put them in priority for you, because if you're a retiree, the first one is going to be, or the last point I'm going to give you is going to be the most important. If you're still working, you see what I'm saying? So I'm going to give you 3. You have to put these in priorities as far as your personal life is concerned. So there's 3 key areas that we need to be focused on in a market volatile time period if you're a retiree, or if you're concerned about your retirement savings. Income stability, number 1, portfolio diversification that I've harped on throughout the week, and most importantly, risk management. So income stability, if you lose, how much can you lose before it affects your portfolio, right? As far as income that you're drawing off the portfolio. Very important. Secondly, diversification. Again, I've harped on this throughout the week. This is how you survive these time periods. If you have a diversified portfolio, you're weathering the storm just fine. If you're properly in the various areas of the market, have little of this, little of that. The risk management side of things, once again, that's your personal decision. As I stressed many times this week, probably every day, if you're losing sleep because of this market volatility and you're fearful of what's going on, that tells you you're taking on too much risk in your portfolio. Use this weekend, sit back and go, hey, you know what? Do I need to build up a little bit of cash? Maybe you're only sitting on 2 or 3% cash. Maybe you'll sleep better if you build up 10 or 15, 20% or something else. Or maybe just get out of the market altogether. That's completely your choice. So again, income stability, portfolio diversification, risk management, those are the 3 things that you need to be thinking about. I'm going to leave you with this. Your retirement money, retirement planning, it's not about predicting these markets. I started the show on Monday by saying no one knows where this thing is going. So you can't predict the markets, but what you can do is prepare for them. So remember, don't predict, but prepare. I'll leave you with that thought. God bless all of you. Let's pray for our men and women overseas, their families, etc. It's a tough time we're in right now, but as long as we stick together as a family, we're going to make it through. And I promise I'll be here with you. Love you all. See you on Monday.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.